It's one of the biggest corporate turnarounds in history. General Motors, which was almost out of cash 2 years ago, put its shares on sale today on the Toronto and New York stock exchanges.
It was only 16 months ago that GM emerged from 40 days of bankruptcy protection in the United States. GM lost more than $80 billion in the 5 years before filing for protection in June of last year. It's a remarkable turnaround for the once beleaguered automaker and a windfall for Queen's Park and Ottawa, which coughed up considerable taxpayer cash to help keep the auto giant afloat.
Joining us today by phone in Panama, the man who wrote the book literally on the best and worst vehicles on the road, the lemonade guy himself, Phil Edmonston. And joining us here in studio, Nick Bontis with the DeGroote School of Business. Now, Nick, the Canadian and Ontario governments only sold off a fifth of their 12% stake in GM. They've made a tidy profit because their GM shares were held at a book value of about $15 each. Now it's over $35. Should our governments have sold off and made a sizable profit, or at least a dent in their respective deficits?
Well, that's one way to look at it. The other way to look at it is say maybe they should hold off and wait until the stock hits $53 and actually pay off that whole payment to begin with. You could imagine if the government all of a sudden now were to pay off their deficit and their debt just because they decided to bail out a corporation. It might be the new way to service government. Forget about taxes. Let's just bail out big corporations.
Phil, is GM now turning out a product that can compete with the quality of the Japanese automakers?
Not at all. No way. I've got to tell you, this is a new way to lose money. I mean, this is coming from the people who stiff their shareholders. They stiff the CAW. They stiff their dealers. I mean, there is not a lot that you can say except that there is money out there and people are looking for an easy profit. And I see a bubble forming. I really do. I think it's going to go up. There's going to be some money right now, and then it's going to go down. I'm not sure. It's a 50-50 whether I would have put my money on selling out right now or later on. But I don't think GM, until they make some major structural changes in Europe, until they have less than murky kind of financial reports, and until they really show that they've brought out a quality vehicle, I'm not sure I would invest in them at all.
Nick, it doesn't seem right that the little guys, the ones who had to rescue GM through their tax dollars, were pretty much shut out of the automaker stock when it went public. So there's pension funds, there's mutual funds, there's other big institutions. They all wanted a part of GM, which might not have left much for individual investors.
Yeah, and this is the problem with the common man, of course. When it comes to IPOs, it's only the institutional investors that get a crack at it early on when the price is very low. And unfortunately, we also have a little bit of investment memory that's a little bit of a problem. What do I mean by investment memory? The last time an IPO was such a big media darling was way back in the dot-com craze. And if you recall, some of those dot-com prices would have an IPO of 18 bucks, and later that day they'd be trading at $120. So I don't think we're ever going to see that again. But there is that little bit memory that's going on with retail investors right now. So for the smart retail investor out there, I'd hold off and just take a look and see what's happening. Chances are it's probably going to trade only in and around $1 or $2 away from the initial price. More importantly, we have to watch what's going to happen in the stock for the rest of the week. For those people that think it's going to come up to $53 and therefore pay off all that original government debt, I don't see that happening anytime in the short term for the same reasons that were mentioned earlier in terms of the quality of the cars. At the end of the day, people still have to walk into the dealerships and buy these cars.
Phil, does this actually mean now that GM is in the black?
Well, yeah, I think in the sense of when you look at dollars and cents and IPOs and the money that's coming up. But no, we're not getting our money back as taxpayers yet. They would have to go up to about $53, $55 a share. But this is like you saw Titanic 1, and this is Titanic 2. This is a lot of high marketing, a lot of professionals getting on the bandwagon. And just watch the next few days. It's going to be quite interesting.
Is it a scam? I mean, are they embellishing it intentionally? Are they inflating the value?
No, this isn't. Well, this isn't scam. This isn't really a scam in the traditional sense. But remember, this is brought to you by the same people from Wall Street who brought us so many other productions.
Yeah. Nick.
Yes.
What do you think? Are these numbers? Is this fact that the GM is emerging from bankruptcy and all these glorious stories that we're hearing? Do you think that they're legitimate?
Well, there's a lot of buzz, absolutely. I mean, this is what IPOs are all about, creating buzz. And of course, the institutional investors have already been in, and now they're looking for their exits. And who's going to buy up the shares? Only the retail people are left. So if you look at the organization as a whole, it has changed fundamentally. I mean, they shut down 14 out of their 47 plants since they've recovered over the last year and got rid of a whole bunch of car models that we, all know, Hummer and Saab and Pontiac. So they've tried to rationalize their operations. From a financial perspective, they are making a profit, but more importantly, they're making a margin. And that's the critical metric here. A margin is defined as the amount of money they make per vehicle. And during the worst of times, they were losing $4,000 for every single vehicle that would roll off the production line. And right now, they've rationalized their operations, as you know, and shut down those plants, and they're making approximately $2,000 margin per vehicle. So that's the good sign. Really, what we have to wait for now is volume. Are they selling enough to actually make the stock price keep on going up?
Nick, I want, Phil, I want to ask you about the Chevy Volt. I mean, GM and the American car makers missed the boat on the hybrids, the electrics. Do you think they're going to make a concerted push with the Chevy Volt and these other green vehicles to hopefully bring GM back to respectability?
General Motors is trying to use the Volt as a halo vehicle. Halo in the sense that, hey, we're into the new technology, and this is a vehicle which is much like our other vehicles. It's top technology, and you're going to be very happy. But I'll tell you that the Volt is very slim pickings as far as holding up an entire division or entire company. I don't think it's a very good buy. I mean, my Lemonade guide, I said stay away from it this first year. Overall, until you have the infrastructure for electric cars, and until you have real solid fuel gains with electric cars where you have the capability of going much more than 40 or 60 kilometers with one charge, people are not going to take it. They're going to go to the Honda Fit, they're going to go to the Toyota, the other smaller vehicles, because that's the future.
All right. GM's got a long road ahead of them. Thanks so much to Phil Edmonston in Panama and Nick Bontis here in our studios. Gentlemen, we appreciate your time today.
Thank
you both.